Welcome back. Well, for the market, it's not a bad place to be actually. The mid-cap index is up 90 points right now. The Bank Nifty is up 31 points, building on to its gains. The headline index is just about marking time at the 17,900 levels. In terms of big movers, sugar has come back. So I don't know if it's just a trading move, but Bajaj Hindustan is up almost about 10-odd%. Couple of other sugar stocks also looking pretty good. In real estate, Indiabulls real estate is up and about. And then something like a Jubilant Foodworks is also up about 2 to 3-odd%. But gas prices continue to surge as the Asian benchmark spot LNG price jumped close to $60 per million British thermal units on Tuesday, which is the highest level since early March. VD Nanavaty, who's the Executive Director and CFO at GSFC, joins us now to talk about the impact that they expect because of the increasing gas prices. So that's the first question. I mean, gas prices surging across the board. How will it impact a company like yours, and how are you navigating through it?
Yeah, just to give some background, we are the oldest gas users in the country. Our first gas agreement with OMGC dates back to 1966. So we know the gas fairly well. And of course, as you rightly said, gas prices are making new records every month, going up due to mainly European large-scale gas requirement due to this Russia-Ukraine conflict. Yeah, it is definitely affecting our operations, but it depends on the gas usage. So as far as urea is concerned, where majority of the gas is used by the fertilizer companies, it is a pass-through for the urea industry because government provides the actual cost of gas used in making urea production to protect the farmers and to protect the MRP that government has set around 5,000 rupees per ton. So the urea is made, say, above 70,000 rupees per month, but farmer gets it at a very, very low cost, and everything is borne by government in form of pass-through. So that is one factor. As far as the phosphatic and fertilizers are concerned, potassic fertilizer, though natural gas is fairly used here also, but government has fixed subsidy rate per ton of various nutrients and PK in a fairly good manner, which protects the nitrogen in a very well manner. So we are covered largely by the nitrogen subsidy in a big way in phosphatic and potassic fertilizer also. So broadly on the fertilizer front, we don't have much problem with the gas pricing
Mr. Nanavaty,
at present.
got it.
And
Mr. Nanavaty, good morning. Okay, you may not have a problem with gas prices, but in terms of supplies, are you getting enough or all of your contractual supply from GAIL, or is there a shortage?
Yeah, as far as the RLNG from GAIL is concerned, there is some shortage. They stick to the take or pay clause so that they don't incur any contractual liability by not supplying the contractual quantity. So otherwise they were supplying above contractual quantity, I mean as per the demand. But that has little bit curtailed. But as far as GSFC is concerned, we have different sources of gas, including trading on the gas exchange and taking opportunity whenever these gas auctions are conducted by the gas suppliers like Vedanta from Badme. Reliance also did for the deep seawater gas supply. And of course, GAIL is coming out with the different sources of gas. So we take this opportunity whenever they arise proactively so that our gas supply remains continuous as per our requirement. So as far as all type of production is concerned, there is no curtailment due to any gas supply issue.
Okay, so there is no, I mean, you're operating at full capacity, right? Basically, you're saying, right?
Right. Yes.
Got that. Caprolactam is one of the biggest products for your company. Now, oil prices have come off sharply. Could you tell us what spreads are like now here?
Yeah, so I mean, recently oil prices went up substantially high, so that definitely affected our spreads. It went down below $1,000, Capro benzene spread. But now it is improving, and as we all know, oil prices are going down, while Capro prices are not going down in tandem. So our spreads are improving, and we hope to maintain $1,000 spread on an annual basis for FY23.
Okay, $1,000 for FY23. Now, you recently set up a plant to produce calcium nitrate. Could you tell us how much will that add to your revenues? I mean, how margin accretive is this going to be? When is this likely to be commissioned also?
Yeah, so caprolactam, I mean, CN is a 100% imported mainly from China. So to respond to the call of the Prime Minister to uh, Atmanirbhar Bharat, we set up this, took up this challenge that why we cannot make it in India. So we have right now outsourced the operations, and slowly we are taking up the our own production also. Though it is a good demand in Himachal Pradesh and Jammu Kashmir, mainly in the apple and related fruits. So it is kind of a one of the challenges we took up, and it's a kind of a token. We can say that gesture on part of GSFC that nothing is impossible. Things may have been done in past for many years based on import, but since we have one of the byproduct from the caprolactam plant, that is nitric acid, which is the main ingredient in making calcium nitrate. So we have the captive availability of nitric acid, then why we can't make calcium nitrate? That was the whole point, and we are moving ahead in that. Not big impact on revenue or profits, but definitely import dependence will come down.
Okay. So overall, sir, can you tell us what is the revenue growth and the margin guidance that you have for the full year? Is this 17.5%, 18% margin something that is maintainable?
Yeah, so as we have said earlier, we see more than 25% growth in the top line this year because all the prices have inflated. So it will make, I mean, uh, all the prices have double or triple compared to a normal average. So that will push up the revenue numbers more than 10,000 crores with a 25% growth compared to FY22. Margin, of course, it is not largely, it is not sustainable as it is. We are seeing margin under pressure in industrial products. However, fertilizers, still the good margins are maintained, barring one or two exceptional items. So fertilizer, we see a good growth, margin between 5 to 10%, but industrial product will be under pressure, it seems, for the whole year, ranging from, say, 5 to maximum 12 or 13%.
Okay, no, got that. So 25% growth in revenues, but margin perhaps not sustainable, will be under pressure. That's helpful, sir. Just one last question, if you can tell us briefly. Ammonia prices had gone through the roof. Globally, big companies had talked about lower ammonia production. Will this push, do you see this sort of lasting? Is this pushing costs higher? And what is your assessment of the impact, slightly longer term, if you have a view?
Yeah, so mainly this is because of the Europeans requiring large quantity of natural gas for their production, for their winter heating, etc. So Middle East and all those regions are the largest supplier of natural gas to Asia, which is expected to divert it to Europe. So, but all those high commodities prices have started coming down. So it is not sustainable that way. It has gone about $1,000 ammonia, but it is fairly below now $900 for a good time right now. So it will come down. Historically, it has been around $300 to $500. Of course, those levels won't come immediately, but definitely ammonia will come down. And those who have gas-based ammonia production, their cost is much lower than what is imported ammonia available in the market.